BLACKWATCH here. I'm going to go over a trade recap for some of the trades that I took on Thursday. I didn't catch anything today for NFP, but I can show you some of the one of the primary trades that set up. It was pretty nice, but I wasn't at my desk and I wasn't really watching price today. But yeah, let's get into it. I'll show you Thursday's trade for a trade recap and we'll go from there. So I think we all know now price has been pretty bearish. We came off this daily flip zone here. If you want analysis on the higher time frame stuff, you can go back and watch the last couple recaps. I cover that. But we had a reaction to demand here. We had this inside bar, right, which indicates a range on the lower time frame, and price traded above it and then traded the opposite direction, which means it's a sweep of liquidity. So price came up into it and it's been ranging for about 20 days. So yeah, that a significant demand level like this after a bullish push like this, in order for price to trade lower, it's going to need to range, because it needs to, however you want to qualify it, controls the market. To short price this much, you need to fill orders. Like, you can't just buy or sell like we do. They can't hit a button. They need to establish orders and kind of stack them over time. So when price comes up and it ranges about like this, typically the theory is that they're stacking orders and they're just filling their positions by getting buyers into the market so they can sell positions, because you need the equivalent sell orders for buy orders or the equivalent buy orders for sell orders. So anyways, so price hit this daily flip and then it was still trying to figure out what it wanted to do for a while. Last week we got that really nice bearish price action. Go to the 4 hour and we'll look at this because this is more today's price action here. But you know, obviously we got a nice break here and then a pullback for a nice entry, and then if you were able to catch shorts in this, obviously you'd be doing pretty well. So if you go to the 15-minute, we'll just focus on this. This is Thursday. This is where the shorts were. So price played into this 4 hour POI and it took out this high right here, right, which was, again, expectation order flow was bullish, so it was expected to do that. But on the way back down for the pullback reaction to the supply zone, we ended up taking out demand and providing with bearish pressure. So if we look, what we have is we have a couple demand zones, right? So we want to look at this bullish leg and we want to find our demand zones. We want to see where the reactions to them are, and then we want to find the POIs associated. So we have this demand zone here, right? You get this reaction and then there's a POI within this for the 15-minute. If we look at this demand zone here, not much significance. You don't see much of a reaction. I see these buy to sell wicks here, so it looks like it's coming off of more of the range. And then because in these buy to sell wicks, it looks like it doesn't sweep any liquidity. After the demand fails, price then trades back up, takes out the high, and then is now serving as a 15-minute POI for price. All right, we also have this demand zone here, which gave us that pullback. All right, so I'll mark this as a CPB as well. Right, it gave us this reaction, which gave us a sweep, and then price traded below it. This was kind of our ultimate indication that price did want to trade lower, because now we have a proper break of structure to the downside. Yep. So now you have confirmation, right? You know that supply is in control. You can feel pretty comfortable shorting it, right? Because if you're looking at it from a range perspective, you have this is your external range liquidity. That's your external range liquidity. Everything in the middle is internal range liquidity. And in theory, the idea is if you're pro trend bearish, this previous bullish leg should just be liquidity. And all the demand zones within it should just be catalysts for pullback. All right, so we have that one, got this one. Some provide pullback, some don't. Obviously, we got one here. This one, when it tapped it, we got this big wick to the upside, right? We have more demand here. We got a window of imbalance, so we'll just mark that up as well, right? And then of course we have the low itself, right? Which again doesn't get much reaction. We do pull back heavily after, but not heavily, but we get a pullback after, right? So understanding how internal range liquidity works, how catalysts for pullbacks work, it's really important to understand that if you get in a trade here, you should hold it, right? It's pro trend. You don't necessarily want to close it just because you get a reaction, right? If you're sitting on the 1 minute and just staring at price, you're going to get a lot of bullish chalks and structure breaks the upside as price is pulling back on the 15. So don't stare at the 1 minute unless you want to overmanage your trade and cut your profits in half or less. So yeah, so demand failed, price pulled right back up into this zone. It unfortunately ranged quite a bit, which took me out of my original position, and then I ended up taking another one kind of late in here, which I'm still holding on to. And then there's a couple other opportunities that I didn't take, but I'll show you how those look. But you know, again, the key thing to focus on is understanding why this POI is significant and why this one here, other than the fact that it's just the extreme, could hold as well, right? It's just the extreme, so that's something you have to keep in mind. Extreme is always viable. All right, so if we look at this, right, what you'll notice is that, again, that's the extreme. Nice push to the upside, push right back down. There isn't much reaction to demand. We get a little bit of a reaction to this range, this window of imbalance. Zoom in for you. Right, you see from here to here, right, window of imbalance. Again, we get a reaction to it. Demand pushes up, attempts to push down. It holds, pushes right back up. So I like this POI for that reason. If price came back to it, I'd be happy to take it. But price ended up just playing upon the sweep here. So one of the POIs that I was looking at was this one here, and covered the window of imbalance as well. And then from there, yeah, it was kind of rangy, and I was trying to figure out the best way to get into the trade, and I ended up taking this. So we have demand here, not much of a reaction, price takes the low, and then we get a little bit of demand here, which we then get that that slight reaction from. So demand. Now this doesn't necessarily take out liquidity, right? But because this high here before this was formed took out this high, that's the liquidity that we can use to basically say liquidity is taken, we can trade from this flip. So I can't remember, I did this right here. So I traded from the wick, right? I could have traded from the candle, but it had already tapped here and I wasn't at my charts for that. That was 3 in the morning for me. So I traded from this wick. It was something that I kind of looked at after the fact. Once this high was built right here and then price came back during New York, this was just before New York open, 6:45 Central Time, and I am typically up at 5, so I'm awake, I'm waiting for this. And yeah, so price tapped into it. I market executed it. Now my break even level is supposed to be technically here, right? It's obviously a little far away. It's kind of not unrealistic. I've seen it plenty of times and I don't mind doing it, but I broke it even early. So what I did was I saw this reaction to this demand, right? Because there's no real reaction to demand outside of this one here. I saw price push up, saw price push right back down. This doesn't sweep liquidity, so I expected price to take the liquidity from it, but I was a little concerned that it would come to the extreme. So as soon as price ended up pushing back into this demand and then holding and making a new high, I broke the trade even, right? And it was just more of working on the fly and kind of analyzing what was happening and just making sure that I was protecting my capital. I didn't quite follow my plan. It would have been this, but like, I don't know if I necessarily would have waited for 16R to play out and then break even. So yeah, so I ended up breaking even early, and then price came in, and then it didn't quite come in to here on TradingView, but the spread did come and take me out for break even, and then obviously it just melted. So that was pretty much the only trade that I took. I think I took, ooh, where is it? I'm trying to think. I did take a loss in here, and I'm trying to remember where it was. I think it was in here. I think it was after price. So price tapped this supply, and then I saw this kind of aggressive push up, aggressive push out, and I used this demand. Here is my reaction. And I thought I saw, the way I saw this was like, oh, well, maybe this took liquidity, so I can trade from this flip on its own. No, this wasn't my loss. This was one of the trades that I broke even on. I'll find the loss. But yeah, so price came up. It tapped into this reaction, right? I was happy because that swept liquidity before. Gave this a 2 pip stop. Because the pullback was so quick, I had to break even very, very quickly, and it ran to about 3R, which is totally cool, and then it just took me out for break even, so that's no problem there. I'm trying to think where I took this loss. It might have been this. Sorry, I deleted all my markups before this video, so I couldn't try to just go through it with you guys, but of course I deleted my loss. I can't remember what it was. I'm pretty sure it was this one. So I did try to get into this a couple times before it actually played out, and then I ended up breaking even on it. So it was kind of a miserable day, if I'm honest, but it is what it is, right? It played out the way it was supposed to play out. I just didn't quite want to wait until here to break even. I could have done the 1 to 4 and broken even there, but it's just not something that I do. And then obviously price melted. But yeah, this was NFP here. Oh, I lied. I think this was NFP. Yeah. But if we look at this, right? So price came just trickling down, and then I think we look at this on the 15-minute. All right, what you'll see is we'll see a reaction to this low. Right, so you have this demand. That's how you know that this POI is somewhat valid, right? It's got validity to it because it's reacting to this low here. So it's not just pulling back for nothing, it's hitting a CPB. So if you go to the 1 minute, the way price formed was by pushing up, pushing down, reacting to, again, the window of imbalance, this larger candle, the demand, and then that demand failing. So once that demand failed, we kind of knew that supply is in control, and we can look for shorts. Now this is a 15-minute POI, and we can look at this, our initial reaction here, and then we have this inside bar, and it just gets wicked by a hair, right? And then that's what price trades into here, right? So that would have been a really nice trade to get into, and then you could have broken even here at the low. And then we tap into another demand zone. So you may choose to TP here based on the reaction to that demand zone, or if you were ballsy enough, you could have held it. But I think you would have done well to TP there. Stop loss of about 3 pips would be safe, and that would be about 8R. So yeah, so then from there, price traded into this supply chain. And then again, what do we see? Win over balance. So what do? We take, you could take the 2 candles at the top, you could take the entire range, whatever you would qualify as higher probability to you. In this case, it did trade to the top 2. I don't have enough data on this to say do that, but obviously this is what worked out today. So another window of imbalance blunder for me, but that's okay. It didn't quite get to where I wanted, and yeah, it is what it is. I didn't chase it. I'm sure there's a couple trades in here, but overall, this is what Friday looked like. This is what Thursday looked like. Quite a few opportunities. You know, just wanted to be, I guess, clear with you guys that if you don't follow your rules, then you know, things like this will happen, right? You might overmanage a trade, you might break even on trades too early, you might TP too early, whatever it is, right? I think another important thing is just understanding like your own ability. So if you're chatting analysis with other people, right, it doesn't really take much for them to say something, right? Like it doesn't really take much for you to change your mind about your position, about your management style, or anything like that. You know, even I'm susceptible to it. I've had plenty of times where I'd be in a trade and then Aaron would say, hey, I would break that early. I would break even that trade a little early because it's looking a little dicey. I'm like, you know what? Yeah, I probably should. Yeah, so that's a true story, by the way. That's why I broke even on this. So if you want to blame anybody, you can blame Aaron, not me. I didn't follow my rules. It was Aaron who didn't follow my rules. But anyways, that's gonna be the video for this week. I know it's kind of short. I was kind of maybe whatever. It's not bar replay, that kind of stuff, but it's hard to be so redundant. If you guys want more detail, if you want to figure out you know, why I selected certain areas, just go back to my old videos and then you can kind of look back and understand how I pick my 15-minute POIs, how the 15-minute POIs are formed, and what I look for within them. I kind of did the same here, but maybe it's a little bit rushed. But yeah, that's pretty much what my week looked like. I didn't really do too much else. Again, I am still holding some positions from let's see, I'm holding one position from up here and then another from, where is it? I think it's in here somewhere. I'd have to check. But yeah, I've got two positions open right now. And no, I'm sorry, it's from in here. Where is that trade? I forgot to show you guys that one. Oh yeah, it's here. So after this low broke, price pulled back up, pulled back down, and then as soon as it took out this low, basically, right here, so this was the demand that held. It's a little low in the leg. I thought it was a little risky, but I decided to take the trade anyways. And then price pulled up, and then what I did was I watched price play into the window of imbalance again, right? It's kind of a ridiculous one. It spans like across like 5 candles. But all I did was wait for the reaction, and then I traded from this here. So price just wasn't trading higher. I traded from this little candle here. I wouldn't say exactly that it fits my plan. It's definitely low probability, but yeah, I don't know. I can't change the fact that I took it and I'm just sitting on it. So again, not high probability. I have profits to play with. I was okay taking the risk on it, but yeah, it's not the best setup. So, but yeah, that was my week, and yeah, I hope you guys have a good weekend. And yeah, I'm dropping my YouTube video tomorrow probably, so check it out if you get a chance. Otherwise, I'll catch you guys later.